Good morning, good afternoon, and good evening. Let me re-welcome you to the second UNS and HBKU Fintech Summer Course 2021. So all of the participants, we are about to start this session, so please be ready. So ladies and gentlemen, once again, I would like to re-welcome you to the second of UNS and HBKU Fintech Summer Course 2021, organized by Center for Fintech and Banking, Universitas 11 Maret, in collaboration with HBKU, Hamad bin Khalifa University, Doha, Qatar, and also Faculty of Economic and Business, Universitas 11 Maret. And I'm Dewani Chiningsi. Such a big pleasure and also so excited to be facilitated in this session, because this session we will, as the previous session, we will talk about a very interesting topic, the introduction of digital finance, that will be delivered by the Professor Aysan. So Professor Aysan is a full-time professor at the HBKU University and a PhD director of the Islamic Finance and Economic Program at this university. He has also various positions, and one of them is he became a consultant in various institutions such as World Bank and Oxford Analytica. So very good morning in Qatar, Professor.
Very good morning to you, or good afternoon to you.
Basically, I'm in France now, so it's still morning here.
So you are in Limoges, I believe.
Yes, no, I'm in Paris right now.
Paris, that's great. That's
great. Okay, so before we start our agenda today, let me read some guidelines for the participant, Prof. And you will have like a 45 minutes, around 45 minutes to deliver your material right after I finishing with the guidelines for the participant. So all of the participants, I would like to remind you that for you to open your camera on and put the rename your name into the following instruction that will be for the ID and underscore name for the sake of the administration easiness. And then we will also remind you that after Professor Aysan deliver the material, we will have the Q&A session. So you have an opportunity to put your question in the Q&A chat box, or you have an opportunity to have like a direct interaction. Just use the raise hand features. And be respect of the session. And last but not least, if you have any question, just look into and refer to the guideline books that we have already sent to you beforehand. So Professor Aysan, you will talk about the introduction of the digital finance today, right?
Yes, exactly. Thank you. Thank you very much for the kind introduction. And it is the beauty to be joining the event from various parts of the world. Ms. Divante, I didn't know that you were joining from France. So I'm sure there are more than 23 countries represented in this event. So this is great. And this is the blessing kind of COVID-19. Probably we will not be that much used to this sort of online events if we don't have the COVID-19. There are always good sides from some bad things happening, but Alhamdulillah, inshallah, may Allah lead us to benefit from the good sides, inshallah. I have been working on the topic for the last couple of days, how to start it. But I always like to start with the cryptocurrencies. So let me, or before that, let me do this. Let me introduce myself a bit longer, such that you will know my journey into finance, and also why in the last 5-6 years I have been mostly working on fintech related issues. I'm currently at Hamad bin Khalifa University. I'm the coordinator of the Islamic Finance and Economic Program. But before that, I was the dean of Istanbul Şehir University. But even more importantly, probably it's made a big change in my life. I was a board member at the Central Bank of Turkey, and I was a monetary policy committee member as well. So definitely, I mean, we are all academics. Alhamdulillah, we are publishing try to publish in good journals. We have academic papers, but there are certain things which seem to be more related with the practice. And I believe fintech is right now, as I mentioned at the beginning of today's opening ceremony, many things in fintech is in making. It is not settled yet. For example, in banking, you pretty much know what are the major topics, how we are analyzing the banks, what are the credit risk of the bank. So many of the fields within banking or in finance is very well studied, because this is one of the oldest occupation of the mankind, humankind. So we have always finance one way or another. Not always, but it is relatively old for sure. We know there are different forms of financing. It doesn't have to be always in kind or in cash, but the debt was always with us from the very beginning. This is what some of the anthropologists is saying. For example, Margaret Atwood is defining the debt kind of a social responsibility between individuals. So if you start the debt like this, definitely it is as old as the humankind, for sure. But same thing for the finance. When the debt is started to be exchanged, then it becomes finance. So today, we will be talking about the finance. We will be talking about the financialization of the economy, overall the financialization of our all of our social transactions. That's why I believe this digitalization is even making this even faster. And I realized this back in when I was working for the central bank. It was, I guess, in 2014 or so, central bank governors come together in Basel, and they discuss about the various important issues for the future. When they start discussing about the cryptocurrencies, I said, okay, and the blockchain in general, they don't say cryptocurrencies at the beginning, but they are more conservative to discuss definitely blockchain first, and how the blockchain will be affecting the international monetary order and the payment systems and so on. I realized that this is something important. And since then, actually, I converted myself. Definitely, I'm working on Islamic finance, macroeconomics. But as an intellectual curiosity, also, I start working more on fintech related issues. And within the fintech, there are many different issues like payment systems. Today, we had very nice presentations from the beginning. One was on the payment system by the Central Bank of Indonesia people. And then on one example of the lending, digital lending. So they made wonderful presentations. So I greatly learned as much as I try to follow. But the idea that I want to convey in my presentation is that finance will be for sure more digital, and even more importantly, it is kind of a revolution in finance to incorporate this digitalization. And I would like to especially touch upon central bank digital currencies, because one way or another, still we are dominated by the nation states. And the central banks, even they are less reputable, more reputable, but they are still quite important for the functioning of the monetary system. So there is a kind of a reputation, and even there are lack of reputation in the country. Even countries are not using their own currencies. There are countries like that. They are just using dollars or some other currencies. There is dollarization, euroization in certain countries, but still the central banks are important for the payment systems, for giving licenses to the fintech companies, acknowledging the legal tender and so on. That's why today also I want to talk about the central bank digital currencies. It is digitalization in finance is all reflected in the idea of central bank digital currencies. So that's why I wanted to talk more on this. Definitely, there are many other issues like decentralized finance, like non-fungible tokens. But I also checked the program. There are people who will be talking about the blockchain. There will be people talking about this cryptocurrency. So I thought that it will be a good contribution because it is relatively less studied field, and it encompasses all the discussions actually, because any discussions that you make about cryptocurrencies, about the payment systems, they're all at the end related with the central bank digital currencies. I was just talking about myself. I work at the central bank, but most of my education was in economics. I did my PhD at University of Maryland, College Park. We have young friends here, our students from all over the world. I mean, we are all students of Fintech anyway. We are still learning. We are all students, even though we are academics and probably we have articles, we publish books and so on, but still the joy of learning continues. And that's why we are all students, and I greatly appreciate learning from others, and I greatly learned today, and inshallah for the rest of the summer school, I'm sure I will enjoy listening to presentations. But one other message that I would like to give, you are relatively younger, and this is and one of the speakers also made the same comment. I agree with him that this is the field that you might want, you definitely want to invest, because this is the future. It is not anymore the banking or Islamic finance. It will not be the same. In the past, when I was a university student, for example, many of my friends start working for the banks because it was a secure job. Nobody was expecting that the banks might collapse. I mean, if they collapse because of the bank run or because of some of the frauds. But as an industry, it is as if it will always remain with us. But look what is happening right now. Many of the banks are being challenged. They may not have the same status. They are trying to acquire fintech companies to sustain their profitability and even to sustain their existence. So that's why my humble recommendation would be always try to follow the most recent developments in finance. If you are if you are a student of economics finance, I believe you are in the right place, because people will teach you from or will share their experience from practice or from academia. And I believe we are just at the beginning of the story about the fintech. Definitely, fintech has been around in the last 20, even 30 years. We have some bibliometric papers, and most of the papers are actually going back to even 1990s. There are not many papers before that, but fintech has been around with us. But still, we are at the beginning of the fintech story. So that's why if you are in your 20s and so on, if you invest in this, I believe it will be a good investment for your future career, inshallah. So let me share my screen and let me go on with my presentation. That will be, I believe, faster. But if you have any questions, you may ask it at the end, or even if it is a pressing question, you may just raise your voice and ask your questions again, inshallah. I'm not sure whether I can check the chat at all times, but at least at worst end, I will have the chance to check the chat box anyway. So, okay, let me first start with some observations why finance and financialization is taking place in all parts of our life. This financialization has been around with us, especially the more leftist economists, finance people, said that all of our life is more financialized right now. And they generally refer to post-Washington Consensus era, which is after 1980s. They say the banks are everywhere, the financial sector is growing faster than the real sector, so there is kind of a mismatch. And these are all quite a leftist critics, and they are right in many respects. Definitely after 1980s, we see that financialization is taking pace. The banks, the financial sector grow much faster than the real sector. These are all what happened, for sure. And also in our lives, everything becomes more priceable. Even, for example, think about that most of you guys are students. Even attending a university is kind of an investment, right? I mean, you spend 4 or 5 years of your time. you spend money for the dormitory, for the schools, for the universities, and you are expecting to get some return. Even when you start thinking about in terms of pricing, in terms of this sort of calculation, actually you are very much in a financialized world, because then you can think about that you can borrow money and then you can invest, and you can compare what are the returns and so on. This is economy is dominating our lives. It is not anymore the social relationship, but the market values started to be reflected in our lives. This has been depicted by the idea of Karl Polanyi with his great transformation. And this is a very solid idea, because yes, really, the market economy was not that dominant in the history. That's why actually we start having economics after almost 18th century, right? I mean, we start the economics with Adam Smith, not just because, I mean, we don't have economics before, but after Adam Smith, the market values start dominating our social life. And so that's how he started this Karl Polanyi, and he said that there's a great transformation, that instead of the social values, we start being dictated by the market values. And this market values, and and also we go on, we say, if you think about the neoclassical economics, they only consider the real side of the economy, by thinking that if the real sector of the economy is in equilibrium, the financial sector will be in equilibrium as well. So that's why they just consider the real side of the economy, if you consider the real business cycle models and so on. But after 2008 crisis, we know that there are certain financial frictions, and it is not that easy to separate the real side of the economy from the financial side of the economy. But in any case, after 1980s, even before, for sure, but especially with the rise of the finance in all parts of our lives, even for the retirement funds, the state withdrawing from the market, and giving the social pension schemes through market structure and so on, which is what happened in Chile, in US, and so on. All of our life become more financialized. And definitely, there are some good sides of it and bad sides of it. If you look at the pros of these ideas, the markets are more efficient, and it is welfare improving to have such a financialization. If you have a more leftist perspective, then you say that all the social values have changed, and the certain group of companies, banks, financiers might have more power on the how the society is moving or navigating in the new century. So there are all those discussions made, and even we discussed the limits of globalization. I mean, all those discussions by Dani Rodrik and so on, for example, is not a coincidence. But right now, we come to an age where the finance and the real side of the economy might be even more linked. You can think about it as kind of financialization still, but the main argument in the financialization was the finance is completely separated from the real economy. So the banks, the financial sector grow faster, so they lost the touch between with the real economy. But this digitalization might provide a solution for that, and we see it here. This is relatively recently. I will give an example from NFTs. This is a piece by Banksy. Banksy is one of the, let's say, contemporary artists. I'm sure especially the youngers know him better, but we don't know his identity. He came up and he's like a street artist, painting the streets and so on. He is a bit protest and having certain points. And he's against kind of a financialization of the art, right? Financialization of the artistic world, even though his items becomes quite financialized later on. And this is one of his pieces. And you might remember him from one of the auctions in Sotheby's, I guess, in Paris, where the guy bought the Banksy's item, and then the picture starts cutting itself. So, and then the price of the piece become even more expensive, even though Banksy say that he is against the commercialization of the art, but his art is anyway became commercialized, even though his intention is not that, but he does. But what is interesting about this piece? They take this piece and they burn it. By burning it, it becomes another artwork. I mean, this is kind of a performance art. This is a contemporary art, anyway, you may like it or not, but this is, but even more important from the finance side, they take this into the video and then they record this and they say, okay, this is one of the rare events. This is an artwork, what we are doing. We burn Banksy's piece and we recorded it, and this performance art is a new art now. And they sold it. They sold it to, at that time it was, or with today's number, it is more than $600,000. Ethereum today is more than $2,300. So you can multiply it. But the idea is the following. I'm not trying to explain Banksy or Ethereum and so on, but the idea is that any of your actions, even your actions, can you imagine? I mean, in the past, financialization that I mentioned in 1980s, it is about the financialization of the commodities. For example, you sell oil, you sell gas in advance. It is kind of finance, or even you sell corn, wheat, and so on in advance through future markets and so on. Even before you produce the items, you can sell the right, you can sell the option to sell it, right? This was the financialization we used to be talking in 1980s, and we were saying that, okay, this future markets, option markets are dominating the financial sector. But now it is a different thing. It is even in there are already existing commodities, there are already existing tangible assets. And these tangible assets are turned into a financial asset through certain contracts, through certain financial contracts. But in here, there is an activity, even it doesn't have to be a commodity, right? It is just an activity, performance, and then that is being sold. What is being sold? Copyrights are being sold, right? Those people who burn the piece of Banksy is saying that, okay, this is my artwork, I have the rights for this artwork and I'm selling it, and this is the price. And this is called actually non-fungible tokens. And another example is the Jack Dorsey. You know Jack Dorsey. Jack Dorsey is the CEO of Twitter, and this is the first Twitter ever sent. He is the first person in 2006 setting up my Twitter, right? This is the first tweet. And then later on, most recently, he has sold this tweet to $2.9 million. But there was a point there, right? I mean, it's not, and then he distributed the money collected for this tweet. The purpose is not to make money out of his first tweet, but to show that, okay, even your tweets, even your opinions, if it is liked, if there is a market for it, you can sell it, right? That is the idea. This is quite interesting, right? This shows that some of the relatively intangible things become more tangible. And as long as you can transfer the copyright to others. And in transferring the copyrights, we have a new concept. This is relatively new, I mean, in the financial history. That shows, again, this comes with digitalization. We have a concept of non-fungible tokens. Non-fungible tokens is a cryptographic token. Actually, it mainly represents who owns that assets or who owns that performance, right? So it is like a copyright. Who is doing this right now? Actually, the notaries, the states are doing it, right? When you buy and sell a real estate, you go to the notary, you go to some government agencies, and you transfer the asset. but they do not accept all sorts of assets, right? There are certain definition of the assets. You cannot say, okay, this is my video, then this is an artwork, I want to sell this to. You can, it is possible, it's a contract. You can transfer the contract, and you can have always notary, some government representative, some state representative to approve it, approve the transfer, but it is more costly. You cannot do it immediately. You cannot do it across borders, because different borders might have different jurisdictions, different laws, and so on. But through non-fungible tokens, you can do it easily without any need for a state approval, and you can do this across the states. Why? Because this is a blockchain system. Everybody openly sees that you own that item, tangible or non-tangible thing, but you own that item. When you transfer it, everybody see it as well. When the person gets it, everybody knows that the person who buy this non-fungible token with an associated property of, for example, whatever it is, they all know that that person owns it. This is a big revolution, okay? I mean, I believe non-fungible tokens will be with us, and that non-fungible tokens will form the link between the real sector and the financial sector. Because what this is telling us is the following. So let me check whether you guys are there, because I just see myself, and then I will share again. You see all these discussions about the divergence between the real side of the economy and the financial side of the economy could be linked through this information provision through blockchain, right? Because any of your actions in the real sector can be linked with the financial sector through this knowledge sharing, through this common knowledge sharing through blockchain. And this is a big revolution again, because any of the activity, first of all, you think of, which is not in the market, could be transferred into the market. This is another form of financialization, right? Because some of our activities, for example, sending a tweet is kind of a social activity, right? It's a social good, probably or social good or bad, depends on how you use your Twitter accounts. But if you share, for example, some information from the Twitter, you send certain tweets to inform the people, you are helping them, you are giving them kind of a positive externality, you are spreading positive externality, but you are not being paid for it, unless you are not a social influencer, or you are not getting some ads and so on, right? But right now, all your tweets could be sold, depending on the information, depending on how you are helping to the society. So that is the idea of Jack Dorsey, for example. I mean, he is selling his first tweet just to show that even the tweets that we generate, a kind of a public good, could be a marketable products through NFTs. And right now we have NFTs for the sports, NFTs for the art, as I show you one example. NFTs also, there are all sorts of NFTs. You can think about it like a you can apply it anywhere. I mean, the contract could be done through NFTs, and most of them are based on the Ethereum platform. It is a kind of a contract, actually. In other words, this digitalization makes it easy to write new contracts. And the contracts are the basic backbone of institutional economics, right? For economics students, right? If you write contract for everything, the assumption is that the life will be more efficient, it will be fair, people will agree on certain things in advance, and then the market economy will function better. Thanks to John Coase, Nobel Prize winner, going back to 1950s, right? One of the founders of the new institutional. So the NFTs will be with us. This is a big financial revolution, I believe, with digitalization. Another thing is decentralized finance. I will not talk about the decentralized finance today, but it is kind of, just the general idea, you give kind of a collateral, and then the platform is lending and borrowing, depending on your collateral, and then you get some revenue out of it. There are different forms of decentralized finance. It may work or it may not work. I believe NFTs, non-fungible tokens, are more into the real life, and it is more likely to survive. Decentralized finance might go on, but I'm not sure whether the state authorities wanted to give such an authority to this sort of platform. So they will be more scrutinized. But it is still in making. I mean, if you consider the decentralized finance in the last 1 year, it's a growing field. Many new cryptocurrencies are coming up with the decentralized finance properties. So it is something to explore for sure, but today I will not go into details of that one. So let me go on. By the way, if you have any questions, you can ask if you have any pressing question. And you can stop me at any time, by the way. We have, by the way, shall we give a break at some point, like, or I should talk for 1.5 hours?
Oh, it's all up to you, Professor, because actually we already have one question. So would you prefer to answer it now, or we
let's answer that, because I mean that is the bad thing about this online meetings. It is not very interactive. I like to have it more interactive. It will be great. Is it in the chat box?
Yeah, so let me read for you. So it's coming from the Farhan from Universitas 11 Maret. He asking about how could I identify if some art have some value or it's just a monkey businesses, and then do NFTs susceptible to 51% attack and those attack. Yeah. Thank you. So he has two questions.
Dr. Farhan, for the question. First part of the question is quite a philosophical question as well. I mean, what is art? What is not art? I mean, in the past, you know, I mean, some group of people, actually, by the way, these are quite related with the cryptocurrencies idea, right? Some group of people decide on what is art and what is not art. For example, Paul Cézanne's work in Paris is not accepted to the art fair because they are not considered to be a quality artwork. But Paul Cézanne is right now one of the most important painters in history. But initially, the painting was, some people consider it, there should be certain criteria, and it does not fulfill that criteria. So I will relate this, and but later on, or let me summarize. Either some people will decide what is a good artwork and what is not. That is one idea. This is more of a traditional societies. There are a group of people who are more powerful than the others. They are the elite of the society, or their ruler and so on. They decide which is good, which is not good. Which might be good, by the way. This is the idea of Plato, Aristotle, right? It's more classical philosophy emphasize that, I mean, what is good and bad shouldn't be all decided by all people. So the democracy is not very top of the agenda for them. But for the market-oriented people, it is the other way around. I mean, we cannot decide on, this is a more liberal idea, if you like. We cannot decide what is the good artwork and what is the bad artwork. Who is going to decide on? Either the individual by himself or herself, or by the market. Right now, what is the good art piece or not is actually is mainly determined by the market. It's another form of financialization, right? The artwork is considered to be kind of, it requires certain qualities, but it doesn't have to be. Just imagine there are some contemporary artworks, for example, by Marshall Duchamp. Even one bicycle circle could be an artwork. He shows that, okay, if I consider this as an artwork, and this is one of the very expensive pieces right now by the original piece by Marcel Duchamp. Why? Because over time people change their minds, and then they start valuing it more, and they start pricing it more. So this is how we are valuing. So I don't have the authority, and I don't have the philosophy of assuming authority. Instead, we might say, okay, the market will decide on the price, will determine the quality of the artwork. So you may disagree. Depends on your worldview. But I will relate this with the cryptocurrency market. There's a similar discussion taking place right now in the cryptocurrency market, right? One argument, like in the Bitcoin, is there is a proof of work. Inshallah, you will see more of the details in the blockchain session. But in the proof of work, what you do, you have miners, they run their machines and they process the Bitcoin transactions, or they generate new Bitcoins, they mine, right? This is called proof of work because you consume more energy, you pollute the environment, but this is kind of a commitment mechanism, showing that, okay, I am serious, I am polluting the environment, I am running my computers, and then I determine this transaction is valid, or I find new Bitcoin. Another approach is proof of stake. Recently, Ethereum moved to proof of stake. And actually, this question reminds me of proof of stake. Existing Ether holders, depending on their existing number of Ether, they approve the new transactions, right? This is also another way. And I believe this is quite related with the first question. One argument is that who's going to, if proof of stake is very much criticized by some people because it is not considered to be very libertarian. It is against the argument of Bitcoin, right? I mean, Bitcoin come up with the idea that everything will be determined by the markets. People who are mining, who are really trying to approve the transactions, will determine the transactions. It is not going to be determined by a single government authorities like central banks. That was the idea. So same thing in the art valuation, I believe. I mean, who is going to value it? Is it a group of people deciding, okay, this is a good artwork or bad artwork, or it is the market? This Bitcoin, more libertarian ideas are saying that it will be determined by the market. This is the first part of the question. That is in my capacity. I can answer that much. For the second part, it is not open to attacks because in the NFTs are mostly based on a proof of stake. So there are definitely, I mean, there could be, I'm not an expert on the security issues, but the technologies are quite strong. And proof of stake in the Ethereum format would actually anyway reduce this attack issue for the NFTs. But I don't know, there might be some, but so far we haven't seen most of the issues about the cryptocurrencies and so on, about this cybersecurity issues are about the exchanges, not about the intrinsic currencies. Currencies seem to be quite fine in terms of these structures, but we see the cases of some money being stolen, or there are some attacks to the exchanges. Other than that, by nature, the Bitcoin, Ethereum doesn't seem to have that sort of problems anyway. Because they are quite new, does the inflow of NFT products that are being sold right now at the staggering amount of money could the downfall? Or that will make it. I believe NFTs will be even more interesting because, again, I mean, we are at the very beginning of the story. More and more people are adopting NFTs. Definitely, these are not investment advisors at all because there are NFTs associated cryptocurrencies. But the idea is that in sports, in arts, in many parts of our life, the NFTs will be used more. It will be more efficient. We will need more help from the government's approval. And if these things are put into NFTs, there will be a big market. So I don't think that the NFT market will disappear anytime soon. It's the other way around. I believe we are still at the beginning. So just these are good questions. I'm sure many of you have similar questions. So let me move on. And inshallah, let's get this sort of questions as we move along, inshallah. So I was, okay. So, and everybody is talking about the NFTs, and there is another one, for example, this is one of the digital art piece. This is being sold with NFT again. I mean, even the art, by the way, is becoming more digital, as you may see. I mean, many of the artwork of the past will be of the past apparently, and they are still valued, but the meme art pieces seem to be coming from the more digital side, or it's gaining popularity. So I gave some examples in here just to show that I can share the slides later on, just to see that digitalization is in everywhere, and people are adopting these changes. So let me move. I prepare my slides in different things. Just the first part was just to increase your attention, just to make you aware of the most recent developments and to shake your attention. Now I will talk about very briefly about how the COVID-19 has affected us, and then I will talk about the central bank digital currencies. First of all, most of the there is a survey made during the time of COVID-19. In 1 year time, there is a rise in almost all fintech related markets. Transaction volumes are increasing, number of transactions are increasing, there are new customers and so on. I mean, fintech was booming anyway, but the COVID-19 has even accelerated this process. And even more important, I would like to show you that there are different dimensions of fintech. If you look at the left-hand side in your computer, for example, investment by retail investors. This is also could be done through fintech. Investment by institutional investors. So there are all dimensions, and they are all booming in times of COVID-19. So these negative ones are actually positive ones, because the number of claims are declining, non-payments are declining, and so on. This is also positive, just to show that the COVID-19 even accelerated the process. In here, you see all the transaction volumes, all types of fintechs are in rise, except digital lending. There's a typo here. Digital lending is declining. Probably it might be because of the regulatory issues, or because the creditors might consider the lending more credit risky, or consider the people more credit risky during the COVID-19. It only declines. Others, like digital payments, digital capital raising of funds, enterprise technology provisioning, wealth tech, insurtech, regulatory tech, digital banking, all sorts of different dimensions of fintech is in rise. So this is a big thing. Or digital custody, for example, through e-wallets. It is one of the most rising part of the fintech. So when we think about the fintech, you can all think about this different dimension. Fintech is not one thing, and there are different specializations. Some people specialize in intermediation of payment systems. Some people are working on the wealth tech. Some people are insure tech. But these are all also good master and PhD theses, by the way, because these are all still developing fields. And again, during the time of COVID-19, the fintech companies, all the companies in US, by the way, this is from the US stock market, all the companies initially after COVID-19 has observed a decline in their prices. But what happens afterwards? Fintech companies immediately resume rising on the, as you see, the green line. But the banks are not even right now in the pre-crisis periods. Banks structurally are suffering. Banks are structurally concerned about their futures. Instead, they are trying to acquire fintech companies. They are trying to collaborate with the fintech companies, because this is where the future is. In the past, we used to have the competition within the industries, but right now the competition is redefined. In the competition in the past was, as you remember in the first speech, for example, by the central bank representatives, I mean, they are emphasizing, even in considering the central bank digital currencies, we have to consider, or even in the payment system, we have to consider the competition and so on. But the competition used to be among the banks. But right now, the competition is between different industries, between the technology companies, telecommunication and technology companies, and the banks. Increasingly more technology companies, telecommunication companies getting into the field of finance. For example, there is Apple Pay, right? Apple Pay is probably, is right now doing much better than the many banks. Or many of the telecommunication companies, for example, are starting to produce some payment system solutions. This is the first attempt. Definitely, they generally start from something which is widely used. They also provide lending, consumer lending, because they know all the information about their customers. Even they know our location, what sort of things we are buying, what sort of places we are visiting. So they can send us SMS, they can do marketing activities. They know us better. So, and then this is a big advantage. It is the age of information. If you know about your customers more, then you can provide better solutions. And who else know better than the telecommunication companies? Because we are always with our cell phones, and we have to, I mean, they observe us wherever we go and so on, and definitely they can provide better products through such an information. Consumers after COVID-19 are ready. I mean, they're increasing. As you observe, I mean, even right now, when we are having online summer course, we are very adaptable. I'm comparing the beginning of COVID-19. We were thinking how to adapt this digital environment, how to give online lectures and so on. But now we are very much used to it. Even we don't want to go back to our regular lives somewhat, right? We want to keep this sort of Zoom meetings. We want to keep our online meetings because these are much more efficient than some of our activities. But how about the banks? Banks are heavily regulated sectors. Banking is quite a regulated sector. It's not that easy for the banks easily to adapt. It is not their fault completely, because given that they are deposit collecting banks, there are strict regulations on the banks. The central banks are on top of the banks. All their activities are being regulated. So even though they want to be quite innovative, they want to come up with the ideas, there are certain limitations. And also there could be even certain generational gaps because most of the ideas in the fintech industry comes from relatively younger generations. In the cryptocurrency world, it is even so. I mean, just think about the Vitalik and others, this Neil Gross, or even think about the Zuckerberg or this technology-related issues and the new products seem to be mostly coming from the younger generation. So banks might be a bit conservative. So that's why they have to get ready for the new age. And also, even it is the case for Walmart sort of companies, right? I mean, at some point, Walmart was the biggest company, but now through digitalization, even in the retail side, Amazon is took place. Jeff Bezos is one of the richest person in the world. And they're not just providing retail sales services, they're also providing payment services. And they are trying to, once they have the information of the customer, they are trying to provide all sorts of product for their customers to get the consumer surplus, in a sense, from each and every individual. So in the post-COVID world, in a sense, what I'm trying to emphasize here, COVID-19 pandemic has changed our lives, and many of the changes will remain with us. In the banking, it will remain with us. So we have to explore new industries, and definitely fintech, anything about the digitalization would help. And if you are working on finance and banking, definitely, however you do your activities through digital platforms will be much more important. But at the same time, there are certain rules and regulations, you have to abide with them. And also one interesting thing, we observe more merger and acquisition. This merger and acquisition is different from the earlier merger and acquisition because generally, when we look at the companies, when they merge or acquire new companies, they are trying to benefit from their digitalization aspect. They generally get smaller companies, but those companies are more dynamic and they often contribute to further digitalization of the existing companies. Another issue from the Islamic finance perspective, Sharia-compliant fintech innovations will be even more important because generally, Islamic finance follow the conventional finance, and conventional finance is changing, so the Islamic finance sooner or later will change. So the data is the most important thing, as I said. Data is going to be more important, and I gave some figures to substantiate these ideas. But you can have a look at it later. And also, this COVID-19 has shown us that, sustainability is important, sustainable development goals are important. Digitalization helps in that direction. Digitalization has a great potential to achieve the SDGs. So this is also, we didn't learn this just with COVID-19, but COVID-19 has made us even more appreciative of this digital transformation for the contribution of the SDGs. Digitalization just directly support 10 out of 17 SDGs. So this is the part that I would like to emphasize. Again, the first part was the awareness part. The world was changing. Everything is becoming more and more digital. And it's kind of a financial revolution or the revolution, a digital revolution in finance. The first part was mainly that part. And the second part is coming closer in the history, and COVID-19 has accelerated all these things. That is my main message in the second part of my presentation. In the third part, I would like to talk about the central bank digital currencies, because again, we can talk about non-fungible tokens, we can talk about the cryptocurrencies, we can talk about the decentralized finance, but I believe all of them at the end boils down to central bank digital currencies, because all those developments are taking place and the central bankers are not staying idle. They are observing that, okay, there is something going on, we have to act on it. But at the same time, central bankers are generally conservative people, which is good. It is considered to be a good properties of central banking. They don't leave things to the chance. Instead, they're much more conservative. And the same approach we observe for the central bank digital currencies. Many central banks are following central bank digital currencies. They have some pilot projects. They are some implementing certain things. They are at least reading. They are collaborating with BIS. For example, BIS has a Fintech hub in different parts of the world. One is in Basel for sure. One is in Hong Kong. They are opening up in different places. It's relatively small place, but one of their mandate is to work on BIS mandate is to work on central bank digital currencies, and there are very good research papers, reports coming out of Bank for International Settlements. And Bank for International Settlement is like the central bank of central banks. Central banks are, almost all the central banks are the member of BIS. They do open market operations. It's a quite highly profitable bank, BIS, but they distribute the profit to the member countries according to their shares. And also, more importantly from our perspective, they make very good research. And they are leading the research in fintech. They develop new ideas, new papers, but they also develop new papers, new data points as well. And the central bank digital currencies is one of their main areas of specialization. And again, the question is, everybody is talking about the central bank digital currencies. Is it a hype or new normal for the central banking? So let me start with their table. This is coming from BIS. For any money, we would like to have 4 properties. We want it to be widely accessible. We want it digital. We want it to be issued by the central bank, because the central bank are representing the governments and they are more reputable. So the governments are expected to live forever. So the money could be issued forever. So it's much more different than the issuance by the private actors. And there is an anonymity issue. One of the nice property of the money is also token based. So you don't have to identify yourself to do the transactions, right? So they made this categorization, and central bank digital currencies are some central bank digital tokens are here. They are widely accessible, they are digital, and they are issued by the central banks. And this is very much demanded in the market, because in the market there are already private digital tokens. What are the private digital tokens? Bitcoin is a private digital token, right? It is mined and so on. It's not completely token, but at the end, you don't know the identity of the person. You only know the public key, but you don't know who is behind the public key. if that person does not identify himself. And it is functioning. It is kind of a wealth accumulation for sure. I mean, it's not just for transaction purposes, but the Bitcoin, since its inception back in 2009, increasingly becoming more successful, right? I mean, more and more people are becoming more knowledgeable about the Bitcoin, not just Bitcoin, but other cryptocurrencies. But still, we may need central bank digital currencies. I will explain in a bit why. Central bank digital currencies are surged a lot in recent years. I mean, at the beginning in 2016, nobody was searching about it. But in recent years, there's an increasing search in the Google. More and more people are searching about it. And on the right-hand side, you can see Bitcoin. When the Bitcoin prices rise, there is more search on Bitcoin. Facebook Libra, actually, if you see on the right-hand side, in 2019, Mark Zuckerberg, the founder of Facebook, came up with this idea of Libra. Libra is based on other currencies, but it is digital. It makes the transaction easier. It makes the international transfer easier and so on. And the central banks are quite concerned. I mean, if you might remember, they even invite Mark Zuckerberg to the Senate. They question him, probably because of his not very good reputation with Facebook. Probably they were even more concerned about the Libra, because I mean, I sometimes ask myself, I mean, if it's somebody else, like for some, Elon Musk seemed to be, let's say, more friendly character or more acceptable character. If he comes with the Libra idea, probably it might be even perceived better. But especially when Mark Zuckerberg comes, because of his dealings in the past in Facebook about this information disclosure and so on, he is probably even more questioned. But at the end, Senate didn't approve him to come up with Libra, because it is really a big change. It is like the Libra would have become like a central bank, because all the transactions will pass through Libra. They will collect more information about the individuals. There will be certain competition-related issues. They will give ads accordingly and so on. This is really something that the central banks especially wanted to think more about it, because as I mentioned, central banks are quite conservative, which is a good thing, I believe. And they are not jumping immediately on the Libra idea. But this shakes them. They say, okay, if this sort of private actors are coming up, we should be careful. Even imagine the same thing for the central, for the China. Alipay and so on. I mean, this sort of big tech companies are being questioned more in China. It is not, I believe it's not just because of the authoritarian nature of Chinese government. They also see that there are certain drawbacks that could emerge from this big tech company. So they're quite concerned that all the information will be just gathered in the hands of one company, and they might do certain manipulation and so on. So they are quite concerned, which is reasonable to a certain extent. I don't know the other reasons for sure, but definitely this is something that we should be really, as individuals also, because our information will be shared. All of our transactions will be seen by private companies and so on. We have to be quite concerned. And most of the news are positive, especially in recent years. This is also, again, one by word count. You see there's an increasing attention on the positive and negative direction, but it is mostly positive in recent years. And then the next question is the following. Is it something, as a central banker, for example, is it an opportunity that you want to reap, or it is an obligation? I mean, can you just stay silent, blind to the developments, or you have to take an action? I believe it is more of an obligation rather than an opportunity, because other players will get in. As you see, even the Libra, some private players get in. And then they might jeopardize your own currency. Especially for developing countries, it is more of an obligation to follow at this. I mean, they may not come up with their own digital currencies immediately, because the international financial system is mainly dominated by US dollar, and definitely US has a lot to say in the global financial order. So my conception is that before the US acts, other countries will just do certain attempts. But the main player in this game is US or the more developed countries, let's say, or the bigger countries. But definitely for other countries, they should follow. Otherwise, if they don't follow, and some countries come up with the central bank digital currencies, there's a big currency substitution. That is one of the challenges, especially for emerging market economies. There's a survey done by BIS. They asked the member countries in which stages are they to use central bank digital currencies. First of all, developed and developing countries are quite similar. They're not too much different. Only in the financial inclusion, emerging market economies are thinking that they can benefit a lot from the central bank digital currencies. That is the big difference. Other than that, they are quite similar. But the central bank digital currencies can help for payment safety, for payment efficiency, for financial stability, for monetary policy, for payment efficiency, and so on, which I will explain in a bit. But for central bank characteristics, there are four dimensions: the architecture of how the central bank digital currencies are formed, how is the infrastructure, how is the access, and how is the interlinkages. I will explain in a bit, inshallah. But before that, let me make some verbal explanation about the central bank digital currencies. What is it exactly and how it works? Central bank digital currency is backed by a government's central bank. So that is the most, it's not by a private actor, but by the central bank. So the central bank has the liability, but the private banks has the liability, but they are not that trustable as compared to, let's say, private cryptocurrencies. It is, as this decentralized digital currencies like Bitcoin have become popular, the world's central banks are beginning to realize they need to get in the game and let the evolution of the money pass by them. Especially, I mean, the Bitcoin has started earlier, but the Libra is actually even make them to think more about it. And right now, we see some experimentation in People's Republic of China in certain states. They are implementing this central bank digital currency, and it seems to be working. And as the first presenter has mentioned, I mean, if you go to China, if you want to use paper money, it is not even accepted in certain places. Everybody, even the street sellers, have Alipay and so on, so they accept digital payments. So what is central bank digital currency? Central bank digital currency is the digital form of country's fiat currency. That is also a claim on the central bank. So it is similar to the fiat money issued by the central banks, but it is in digital form. But if this is important, why you will see some of the benefits of this digital form, because when you have the paper money, you cannot have many functions. But when it is digital, you can have many different functions as well. Central bank digital currencies, similar to credit cards, but they are different because it is the liability of the central bank. So the government must maintain the reserves and deposits to back it up, which is maintainable because anyway the central banks are issuing, right, their own currencies. But in the credit card case, it is issued by the private banks, and then they have to have a backup to issue credit cards. And it is heavily regulated. But this one is digital, similar to the using your credit card, but it is you directly form a relationship with the central bank in a sense. Digital currencies are already exist actually. There are thousands of virtual currencies. Mostly we call them as cryptocurrencies, but these are some of them are centralized, but most of them are not centralized. For example, the main property of the Bitcoin that many of you will know is decentralized. But the Facebook DM, which is the new form of Libra in a sense, is a centralized form. So in the market, there are centralized and decentralized digital currencies, but central bank digital currency will be definitely a centralized one. So why would the government get into virtual currencies? So that is the big question. Again, I mean, is it an opportunity or it is some sort of obligation question. There are lots of reasons. First of all, depending on economic situation within the country, but IMF is listing the following ones. First of all, cost of managing and transferring cash is quite expensive. So when you do digital, so there's kind of a cost benefit. In terms of financial inclusion, digital central bank digital currencies are much better. Private companies need competition, so they meet the transparency standards and limit illicit activity. So there are private actors, but as I mentioned, there could be certain competition-related concerns. So still the central bank may want to enter into the market as providing the regulatory role in the market. And more importantly, I believe, in addition to all these benefits, the monetary policy could be much easier, and the monetary policy tools you have in central banking could be larger with the central bank digital currencies. But what are the problems? There are also certain problems. That's why the central bank digital currencies are, or the central banks are quite concerned about the central bank digital currencies. It is not about the technology. They can provide the technology. They can easily implement it. But especially for emerging market economies, central banks. Imagine that you have your banks and you have your digital currencies. Once you have your central bank digital currency, by the way, you don't have to work from 9 to 5, right? Regular banking hours change because it is digital anyway. You can transfer your money 24 hours, 7 days, which is the case right now that you do with Bitcoin, right? They're saying that, okay, there's no time period that I do the transaction. But for the regular banks, there's a time period defined by the central banks. You can only do your transaction from 9 to 5, even 9 to 4, something like that. But what if you have central bank digital currency, then the customers will be allowed to do the transactions, right? For 24 hours and 7 days. And let's imagine that there is a rumor about a bank. What's going to happen immediately? People can run out of that bank. And this happened, by the way. For example, most of the bad news comes on Friday nights, just after the market close. Why? Because in between, at least the markets are not panicking. You can do something in between, right? But if you have a digital currency and if there's a rumor about a bank, then immediately they might, the people run and there's a bank run to a specific bank. And also, I mean, another argument might be by entering into the private business of cryptocurrencies, then the governments might be killing the markets. And there might be issues about cybersecurity and so on. That's another argument, drawback. And even more important though, once you have the central bank digital currencies, it is easy to regulate because all the transactions at this you can observe. But at the same time, there will be new companies using your central bank digital currencies. And right now, for example, many central banks are giving the authority to certain payment companies, and they are regulating these payment companies. They are asking many requirements. They are asking capital adequacy requirements. They are even questioning the founders of these companies. But what if you have the central bank digital currencies and all the fintech people start using this central bank digital currency even without getting any permission from the government? So it will be much more difficult to regulate those sort of companies when the central bank digital currency is there. Another concern is what are the national security implications for the central bank digital currencies? I mean, that is a big issue right now. I mean, if you consider, for example, Tether, there are certain stable coins. Right now, they came up to make the transactions faster in the exchanges. But now, I don't know whether you are following the cryptocurrency market, but there are concerns about the Tether. There are concerns about some of the stable coins. So this is also a security threat, in addition to other cybersecurity related issues. So if you have a central bank digital currency, at least you can observe what they are doing, right? That's why recently Janet Yellen actually has made a speech. Either we will come up with our own central bank digital currency, or we will regulate this stable coins. And the stable coins wanted to be regulated because there are always concerns, and there are even certain parities. And sometimes the value of the tether declines as compared to USDC, which is supposedly a real dollar. Anyway, this is another concern we have. Let me also talk about the motivation and consequences for the central banks, and then I will get the questions. That will be better. But central bank digital currencies, there are, there are 4 functions of money: store of value, unit of account, and medium of exchange. Right? These are the 3 commonly accepted forms of money. Or the functions of money. But there are the 4th function, there is also 4th function, which is the monetary policy. In order to boost the economy, in order to regulate the economy, the central banks play a big role by issuing more money or by withdrawing money. That is a big monetary policy, and we see the importance of it after global financial crisis, right? After global financial crisis, actually, we are a lot to we benefit a lot from the central banks. They immediately jump in, they print more money, they try to save the global economy. There are different arguments. They even harm the global economy. The global economy couldn't react and so on. There are this sort of arguments, but at the end of the day, we quite for sure know that after 2008 crisis, we didn't get into a Great Depression of 1930s. So it is the success of central banks, actually. But this success comes with their monetary policy functions. But even they have monetary policy functions, there are certain limitations. For example, there is an argument of zero lower bounds. Many central banks in developed world, they lower the interest rates to boost their economies, but there is a lower band of zero. And instead they start buying bonds. They do operation twist. Even they change the term structure. They buy short-term. They sell. They buy short-term bonds by printing more money, and then they buy the long-term bills just to increase their interest rates, to lower their interest rates. So central bank digital currencies, in short, could be used for monetary policy related functions. It could have implications for the financial stability. It could have implications for taxations and illegal activities. We have already, most of our reserves are digital anyway. They are never printed. But again, we are not using them digitally as individuals. Many of the central banks are paying interest for the central bank reserves of the private banks held at the central bank. Some of the central banks do not pay, but oftentimes they pay. So it's a form of regulation again. But again, the issue is if people start using more of other cryptocurrencies like Bitcoin. So it is kind of a different product. And instead of using your local currency, people are using more Bitcoin. Then you might use your monetary policy independence, especially for the developing countries. Dollarization in emerging market economies, people are using dollar, euro, and so on, more reputable currencies to replace their domestic currencies because there is less inflation. The other currencies are more stable than their local currencies. What if the Bitcoin function come up with such a function? In certain countries, it is quite possible. To do the transactions through Bitcoin, similar to doing dollar. So that's why it's another threat. So even the emerging market countries might want to have central bank digital currencies. Another question that we ask: would the central bank digital currencies accounts head of the Bitcoin takeover? So they are not exactly the same. Central bank digital currencies are centralized, but the Bitcoin is decentralized. The Bitcoin doesn't pay interest. Now this decentralized finance and future markets might start doing it, but it is the future market of the cryptocurrencies are relatively less developed. And Bitcoin, the central bank currencies are not inherently anonymous, right? And because all the transaction pass through the central bank one way or another. But the cash and Bitcoin is like that. You can only give your public key, and you can do all sorts of transactions. It is difficult to exactly pinpoint who owns that wallet. But definitely, is it a good thing or bad thing? I mean, it's a good thing if for the individual's liberty and so on perspective, but it might be a bad thing because it could lead to certain illegal activities. So that's why probably even when we have the central bank digital currencies, we will have some private cryptocurrencies because the central bank currencies do not account for all the properties. But at least the central banks are thinking that we should provide central bank digital currencies such that at least there will be less demand for Bitcoin type of private cryptocurrencies. Again, let's come to the point of monetary policy. Once you have the central bank digital currency, it is like a smart currency. You can define certain properties. For example, there's a discussion after 2008 crisis or even after COVID-19, right? There is a kind of a helicopter money. You want to boost the economy, you want to inject more money into the economy, but you cannot do this. I mean, when you print the money, people again give it back to you. I mean, they still deposit the money in their accounts. They don't spend it. But with this central bank digital currency, with the smart money, you can say that, okay, I'm going to issue a new currency or my digital, or I can say the following. If you don't use my central bank digital currency within 6 months, the 10% of the value will be lost. So people will jump to consume more, right? So you can push them to consume more by giving such sort of incentives. Right now, with the existing fiat currencies, with the paper money, you cannot do this. But this is a very effective monetary policy tool, by the way. This was very much needed in 2008 crisis or even at the beginning of COVID-19 pandemic. The central bank issues more and more money, but that money is turned back again to the central bank because people were not spending, people were not getting new loans. If the new loans are not taken, so there is no inside money, then the money is taken back. So central banks then even have to use more of the existing policies even more aggressively. So it is at some point, I guess one of the central banker, Janet Yellen, I guess said, like it's a bazooka. It's a very heavy monetary policy tool to have this interest rate policies. But if you have more fine tuning with the central bank policies, central bank digital currencies, it will be much easier. You can pay interest. You can pay negative interest rates. For example, even right now, European Central Bank is having a negative interest rate, but their negative interest rate is not too negative because if you make it like -3 negative interest rate, then people, instead of holding their money in the banks, they can hold the money in their own wallets, in their homes, and that policy will not work. So there's a limit. So they cannot lower too much the interest. But with the central bank digital currency, as I gave an example, you can specify if you don't use the money, then the value of the money currency will lose value. So this negative interest rate problem could be solved with the central bank digital policies. Even you can have certain targeted policies. For example, you can say, if you use my currency in the local products, then the government will pay you 10% bonus, right? You can do this with the smart currencies. If, for example, the governments are trying to find smarter way of subsidizing the economy. They want to increase the export, for example. They want to rely more on the domestic production. All those things could be done with the central bank digital currencies, which are relatively less explored, but will be explored more.
I beg your pardon, Professor.
Yes.
I'm sorry to interrupting. We'll still have 5 minutes left, and
Okay.
then we will
so
have
let me actually, I pretty much give my main messages. So let's get the questions. So that is the custom of the professors. Once we start speaking, we never stop. So thank you, Ms. Devanti, for warning me. So let's open up the floor for questions. I believe it will be much better.
Yeah. So we have a bunch of questions already, and I would like to remind all the participants, the committee already put the attendance list. So you may please clicking in the link and put your name and your identity there to the administration purposes. So we have a lot of questions regarding what the material that the Professor Aysan delivered to us. The first question is coming from Mr. Jaya from the UNS. Digital finance help us to provide financial service to the unbanked, but at the same time, it can increase information asymmetry between the parties involved in the transaction. How can we reduce this risk?
Yeah, that's a very good question, and that is the reason why these regulators, governments are trying to regulate the big tech companies, because the big tech companies will be so big, they are going to collect all sorts of information that they will be even more powerful than the governments. Probably they have more information about us than the governments. They have all of our credit card transactions, where we are with the phone, with our smartphones and so on. So they have to be regulated. There are some attempts taken in Europe. US is relatively less regulatory friendly anyway, as always. But the China is trying to do it. We don't know the exact reason, but definitely they are concerned. Definitely there should be a balance, and these big tech companies have to be regulated as well. But again, it is difficult because there's always a tension. I mean, are we really trying to empower the people by regulating them, or we are actually reducing the efficiency of this big tech companies? Because there's a huge economies of scale in this digitalization, right? One company is having billions of even customers. If you partition them, when you partition them, the companies will be still big. So it's a very tough question, but definitely there is such a trade-off, and that should be of our concern.
Okay, Professor, but elaborating what you're talking about the function of the government to like organize this one, as we can see, and in the Europe we have like a digital single market, so there is a standard on it how this kind of digitalization work. But in the other work, like there is no kind of standard. So how do you see this one?
Exactly. I mean, Europe is a bit ahead of the game in terms of regulation. They're always more regulation friendly anyway. And also another reason might be most of these big tech companies are not coming from Europe because of their structure, because of their heavy regulation. Probably they are mostly coming from US or from China. And that's why they are even more defensive. And that's why they are even quicker in adopting these regulations. So there are this sort of counter effects, I believe, also. But definitely, the good thing about this developed countries, the EU, they can generate a benchmark, because for a developing country, it is quite difficult to deal with this big companies, right? I mean, you cannot, if you ban, for example, certain companies, then it will be not considered very democratic. There are certain benefits of these big tech companies, but at the same time, they don't always abide with the rules of the local economy. But the European Union is much stronger, and they are, in terms of the capacity, they have more capacity to regulate. So by enabling this sort of regulations, I believe their regulations might be a good example for other countries to follow. So let me stop here for this question.
Okay, so thank you very much. So we push on the next question from the Natasha, UPM, Malaysia. Is it effective for underdeveloped countries to implement Bitcoin as their daily transaction in order to prevent inflation, remembering that El Salvador has implemented and other South American countries are planning to do so? Since then, will this be the rise of the crypto?
Yeah, that's a very good question too. I mean, El Salvador is, it's a relatively small country, and they have adopted Bitcoin as their legal tender. These are relatively small countries anyway. I mean, most likely nobody is using El Salvador's own currency. Anyway, it's quite dollarized economy. And instead they use Bitcoin. Still, definitely it is important, because even it is El Salvador, because this is a postmodern world. Either the very big countries will adopt it, or very small countries will adopt it. And El Salvador is taking a lead. At some point, Malta has tried the same. Malta was trying to be a cryptocurrency hub in Europe. There were certain regulations. They couldn't do it as much as they wish. But El Salvador is relatively less regulated, relatively more distant. So El Salvador has adopted this. But even, I mean, when you look at the prices of Bitcoin when El Salvador has adopted this, it didn't really skyrocket it, right? Because at the end, it is not like a major country adopting it. It is a relatively smaller country. But definitely, how I approach these issues is as follows. At the beginning, we were saying that people were discussing whether the Bitcoin will be completely banned or not. But over time, as the Bitcoin remains in the market, the Bitcoin becomes more and more powerful. It becomes more legitimate. Right now, more and more people are investing. It is the coverage is more. More and more institutional investors are also investing. So this adoption of El Salvador of Bitcoin is more important for the livelihoods. It shows that it is becoming more and more legitimate over time. But in terms of the prices, we didn't see very big price jumps at that time. But definitely, it's an important thing for sure. For sure.
Okay, thank you, Prof. I think it's also answered the question from the Mr. Khalid from the HBKU, and the next question will be for the Mr. Ayudel from Hamad bin Khalifa University student also. How does the cost of the emission of the CO2 come accompanied with the production of the cryptocurrency influence and the pace and the rate of the adoption of the cryptocurrency in the future?
Ayodil, this is a very nice question. You should make it one of your master thesis topic, I believe, because this is a big issue. I mean, on the one hand, the market is trying to be functioning without the influence by the central banks, without the influence by government. But the cost of it is polluting the environment because you have to use energy for that. And that's why, I mean, Elon Musk at some point withdraw his support of Bitcoin. And then all of a sudden the Bitcoin prices have declined. And then recently he said, okay, this is still possible to produce the electricity with the renewable energy. And then he adopted Bitcoin again. But that's a very valid question. I mean, what is the emission of CO2? I mean, there are some predictions, and it is predictable because we know how much transactions are done by the miners. So it is easily predictable. But definitely, I mean, there are always costs. And when you ask the Bitcoin people, they say, okay, these banks are also polluting the environment. They are running lots of machines. They are doing. So it is kind of a debate in between. There is no completely one opinion there. And as Elon Musk has done, there are even different ways of interpretation. But it's a question. You can look at for example, Bitcoin prices. I'm sure there are papers like this in the market, Bitcoin prices and how much the miners are using electricity. I'm sure there is some kind of a correlation, especially another question, for example, you know, China has banned the miners in the summer or in recent times, and it affected the prices. It gave a negative impression on the Bitcoin perception. The Bitcoin prices have declined. So the miners have been hit by the regulation and also by the declining Bitcoin prices. All those questions are good research questions. Ayodil, inshallah, you will work some of them. Why not?
Thank you, Prof. Aysan. So I also will humbly invite if any participant want to have interactive question to Professor Aysan, please kindly use your raise hand feature. So while waiting for the interactive question, I will read another question. I think the question is regarding the CBDC, Prof, from Aloysius from the Venus University. With the recent development on CBDC across many countries, does most of the CBDCs that are being researched around the world develop their own blockchain technology, or are they CBDCs being developed use already proven blockchain platform like Ethereum as a basis?
Thank you. Thank you. This is a very nice question too. I was going to talk about it in my presentation, but we couldn't come to that part because of the time limitation. The central banks generally do not want to use the private platforms. For example, Central Bank of Saudi Arabia, SAMA, they made an agreement with Ripple about 3 years ago or so. And then the Ripple prices have increased. But there are different forms of Ripple. One Ripple is like a coin, other Ripple is the payment solution. So the Central Bank of Saudi Arabia has bought their product for the payment systems. So there are central banks who are benefiting from the existing technology. But for central bank digital currencies, they generally want to establish their own technology, which is not that difficult anyway. I mean, technology issue is the secondary issue, I believe, because they want to have the sole ownership. But this doesn't mean that they are not benefiting from the existing companies. I'm sure they are benefiting from Ripple, they are benefiting from Ethereum and others to learn the technology. But I don't think that they say, okay, I'm gonna have my central bank digital currency working through Ether. I mean, the smaller central banks might do it because of their resources, but for bigger countries, they will try to not to use the existing platforms, existing coins to launch their central bank digital currencies.
Okay, thank you very much, Prof. Aysan. I thought that it will be our last question, but as you see, probably there are some of your point that has not been delivered yet. So I think it's time for you to have like a final statement or another information that you want to add to the participant, Prof.
Yes, I was going to talk about this characteristics of the central bank digital currencies, how the infrastructure actually, but this is more technical thing. Probably I can share my slides and the attendees might look but the idea that I want to deliver, first of all, just to recap, it is kind of a financial revolution. I mean, this digitalization is not just in words, it's not just a summer school, it's not just for papers, for research, but really it is going to change our life. I would recommend you all to follow non-fungible tokens. I believe there is a huge potential there. And again, I would like to emphasize that this non-fungible tokens are actually linking the real sector of the economy to the financial sector. So many of the arguments against financialization is somewhat linked, somewhat might be corrected. So we shouldn't always think about the negative dimensions. I mean, sometimes whenever new technologies comes up, we think about the negative side of it. Okay, there is kind of a nostalgia. The past was better. We were living in a better environment. The environment was cleaner. We were not living in very big cities. The life was simple. I mean, all these are correct, but at the same time, there are certain benefits that we reap from the technology, especially from the Islamic finance perspective, for example. Many of the Islamic finance transactions are done through certain engineering. And this engineering is quite costly. And this digitalization is actually will make it easier, will make it less costly. So this is, for example, one of the areas that especially our students might want to explore further. And but still, I would like to re-emphasize the NFTs are important, decentralized finance is important, central bank digital currencies are important at the global scale. We need to all follow this. And again, even for understanding the real market, this is quite interesting. Even, for example, the first question about the art, even how we value the art. The cryptocurrencies are telling us a lot. One of the reasons why I started working on cryptocurrencies is this one. In order to understand the nature of the money, then the best thing is to understand the nature of Bitcoin, because they are against the money generated by the central banks. They are against the Bitcoin people who are the inventors. We don't know who's Satoshi Nakamoto. Is he one person, or there's really that person, or it's a group of people? We don't know it at all. But it tells us a lot about the nature of the money. Money is at the end is a reputation. Money is at the end a trust. We are selling trust to others as central bankers. I mean, if our central banks are trustable, then our money is becoming more valuable. In order for the financial stability, you should have the trust. Again, this cryptocurrency world is telling us a lot. All of a sudden, it also, we have some papers, for example, recently, one of them has been published in Economics Letters. We show that the sentiments about the cryptocurrencies are changing the prices a lot. it increases the connectivity between different cryptocurrencies. And the sentiments are measured by the Twitter, social media accounts, and the newspapers. So this sentiment research, how the sentiment, this is more narrative economics that put forward by Robert Schiller or by behavioral economics in general, that the narratives could be quite important to generate realities. And this is, again, we observe this more in the cryptocurrency world. There are narratives like narratives of Elon Musk, narratives of Vitalik, narratives of some influencers. They are mainly determining the value of the cryptocurrencies. So it tells us about the actual monetary system, financial system. So I encourage you all that we are still at the beginning of the story. I am learning still a lot, and I'm enjoying it as an intellectual curiosity. I encourage you all. I mean, don't just think that this. I believe this FinTech summer course should be the beginning for you even to further explore these topics. Given the limited time, probably we couldn't discuss more on certain important issues, but inshallah, we will have other occasions to discuss these issues. I believe I have a lot. By the way, I learn a lot from my students in this cryptocurrency world, in the FinTech business, because you guys, especially the younger ones, are following the developments even more. So inshallah, we will learn from you more, inshallah. Thank you very much. So back to you, Ms. Devant.
Thank you very much, Professor Aysan. And that was the end of our session today. I'm sorry that I cannot bring up all of the questions to the Professor Aysan due to the time limit, but I think it's good for us to have a photo session today. So to end our meeting, I would like to invite all of the participants to turn the camera on, and we'll have the photo session in count of 3. So committee, are you ready? And all of you, please have like a big smile to end our session today. I'm pretty sure you learned a lot. 3 sessions today. We talk about the payment system. We talk about the peer-to-peer lending, and last but not least, a very comprehensive and fruitful discussion already given by Professor Aysan, discussing about the introduction of the digital finance. So in count of 3, everyone, 1, 2, and 3. Once more, 1, 2, and 3. Once again, thank you very much to all of the participants to stay with us from the morning until the afternoon Indonesian time, and anywhere you are, the 23 countries participants. And I would like also to remind you that tomorrow's session will be started at 9 a.m. Indonesian time, Indonesian Western time. The first session will be Model 16, Research in Fintech. Will be delivered by Dr. Putra Pamungkas from the Universitas 11 Maret. And do not forget all the participants that you must fill in the attendance list using the ID and also your name, that the link already provided by the committee in the chat box. So Prof. Aysan, thank you very much once again for giving us such a fruitful and very comprehensive lecture on the theme today. And I'm really sorry, due to time limit, we cannot hear all of the presentation that you already prepared beforehand. And to all of the participants, once again, thank you very much. We really hope and we wish that you enjoy our lecture today, and see you tomorrow in the 9 a.m. Western Indonesian time. Thank you very much once again. I'm Dewandi Chiningsi on behalf of the organizing committee sign out, and Assalamualaikum warahmatullahi wabarakatuh.
Salam. Thank you very much again.